Obamacare, the European Summit, the end of the month, and the end of QE2, and the end of the week. So what's there to worry about? Look, forget the news. Forget the political pundits. Let the market decide what's going to happen. The direction today after the announcement from the Supreme Court was decidedly negative. The bottom line is, and always will be, the market. It tells you what is really going on with the smart money and what they are doing with their money. Aren't they the ones you want to follow? Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your midday market update for Thursday, the 28th of June. Hard to believe that June is almost over. And not weather-wise, we're getting some very hot weather here in the mid-Atlantic. But let's take a look at the markets. And I've got the S&P 500. We'll start with the S&P 500. And you can see, based on the S&P 500, it just seems to me that this market is, in fact, let me just get a little closer in on this. It just seems that we're sort of rolling over in a very leisurely way. And you can see just what I mean by that. It's just sort of rolling over like, ooh, like that. Just heading down. This action today, we're actually lower for the week. And we are expecting this market to take out these lows right here. And if we see that happening, I think it's a good chance we're going to see this market go lower. And look at these moves. That's a lower low, lower high. Just draw the lines. So the next low is going to come down further. I think it will. I think we'll be going much lower, as a matter of fact, in this market up until the end of November, October, somewhere during that period. If you haven't seen my weekly, this past week, I did a special report, video report on the S&P 500, outlines where I think it's going to happen, and it's playing out pretty well so far. So let me just clear the screen, and I want to show you some other lines that we have drawn on here. You probably noticed these lines here, 23.6 down here. So we scope this out a little further, and we've got a 38.2%, which is 1133. If we go out still further, we have, oh, I have to go even still further than that. We have 1,045, and still further than that, we have 957. Now, I drew the lines from the lows that were taken in the low part of Q1 in 2000, and that was the low part of the market. And of course, we've had a great recovery from those levels based on a lot of money being spent, and with the QE1, QE2, possibly QE3 is coming down. But it seems to me that it's getting less and less. You notice the swings here. It seems to me you're getting, here's the swing, the first swing, boom, nice big move, little pullback, not quite so far this time, little pullback, bigger pullback, and then we just managed to barely take out the previous highs. And that is also on a negative divergence. So I think the concern I have now is this sort of pattern we're seeing, to me, is a negative pattern to the downside. Next week, I think it's going to be a very interesting week, and certainly tomorrow, being the end of the month, the end of the quarter, and the end of the week, and for traders, it's going to be a very, very interesting week. As I said, this market is lower for the week. And I think that's the important thing to do. So let me just do a quick weekly chart for you to show you that. And we can do that quite easily with Market Club. Just click here. Boom, there it is. And I'll scope this in. I'm going to take the Fibonacci off right now, just for the moment. And let me just do that. Boom, okay. And let's scope this in a little further. So there's the action. Not very, very good. You can see this is a weekly chart, of course. We were lower last week, and we're lower this week. I would say if we take out this low here, which is the 1306 level, this market's going to be really gasping for breath. So I think that's the important thing to look at. Nonetheless, it's not acting very well. Certainly a move below the parabolic is right here. It's coming in at 1287. I don't think that's going to be hit today anytime soon, but I don't think there's going to be a lot of enthusiasm to push this market higher based on the news that came out today. So looking at this market, we can simply go to the Dow Jones, and this is the Dow Jones 30. These are obviously some of the biggest stocks in the world. You can see right now we're actually lower for the week. We were lower last week, and it looks like this market's just beginning to roll over to the downside. Much the same on the NASDAQ. You can see that's actually down. Actually, they closed higher last week, but it's down this week. And I think we'll see more pressure on that market as well. So moving right along, you know, we've been talking about silver. We've been how bearish we have been on silver. Here's a new low on silver, moving below the 27 level decisively. Look, 26.41 right now. A move below the 26 level sets this market up to move to 24 and then ultimately to 20. All the arguments that the bulls have been using about, oh, you know, concern with the banks and everything else, maybe they're valid arguments, but the market for some reason is telling you that it's not ready to go up higher, and maybe this has suddenly become an industrial metal as opposed to a semi-precious metal. So moving along, taking a look at gold, for example. Gold is still lower for the week. And as a matter of fact, if we close down here in gold on the week, so if we close right around the 1553 level, this is going to be the lowest close in gold for this move on a weekly basis. And I think that's what's important to look at. If we go on a daily basis, and we just go to the daily, you can see we have had lower closes back here and back here, but on a weekly basis, we haven't had a lower close. So that's the important one to remember. This is not looking very, very good for the bulls. And I think a lot of gold bulls have got to be very disappointed with what's going on. If you look at any of the cable news shows or whatever financial shows, you'll see that the ads for gold dealers or gold sellers or whatever you want to call them are just disappeared, just so disappeared. The interest on this market has gone to zero. Now, if you go back a little bit, right back here, so this is one of the things when everybody gets in the market, and this is exactly what happened. Gold was touted to be going to right here at $2,000 an ounce. And every dealer, everybody that was selling gold bars was selling like crazy, advertising like crazy, telling you the 10-year track record. Yes, I understand the 10-year track record. But if you're a trader, you've just gone from 1,900 to 1,550, which is a significant amount of money. No question in my mind about that. And the question is, has it stopped going down? Well, gold potentially could go to $1,200 an ounce. Why not? There's no reason why I can't do that. And I think that's the important thing to remember. Markets tend to go too far on the upside here, and they go too far on the downside. So that's the swings you have to watch for. But right now, if we take everything off the screen and we go to our trade triangles, which we talk about all the time because we rely on them so much and they're so good, is you have a negative 100% reading, and you're going into the weekend, at the end of the quarter, end of the month, and the end of the week. I wouldn't want to be long this market. I mean, I really wouldn't want to be long this market, particularly if you see a move, if we take out these lows here, on a weekly basis, we will be closing lower. You could seriously see this market down to the 1450, 1470 level without too much of a challenge. So let's go to our next market. Next market's going to be copper. Copper is acting okay, not great, but I'll show you what I'm seeing in copper. This looks to me like a very negative pattern that we're seeing developing in copper. And let me show you what that is. You've had a sharp move down like this, here, like this. And then you have this sort of little meandering thing like this. This to me is basically a bear flag. And what this means is that that the formation's like that. That's a classic bear flag. It usually breaks to the downside, and when it does, you can measure from the highs, which is right around here. Let's see, we'll round it off to 345, to the lows 325, and if we break, so that's 20, so we go 345, 325, so we're measuring from this level here, the low, to where we've rounded off the high to be 345, and that gives you 20. And then you take the move, if it takes below 330, you're looking somewhere around 310, which is our target zone. That's our target zone once we break through here. So nonetheless, that's what we're looking for. So let's clear the screen, go to our next market. And the next market, of course, is a big surprise to a lot of people. And that's what makes markets so interesting. And that's the crude oil. Look at the crude oil, how we're trading now. We're down today. We're down 2.18%, which is a huge move, as this is a commodity that we all use. Now, obviously, something is going on that we don't know about. It doesn't matter because the markets, if you look, our monthly came in right here. Our monthly came in right here at 97.37. You can see that on the monthlies right here. and the weekly came in at 98.21. So it's never changed. It's never changed. That's a huge chunk of change. That's almost $20,000 a contract in one contract on the NYMEX. So it's a huge move on the downside. Now the question is, what happens if we go through the 70, these levels here? Well, we could go lower. We could go to 75, could go to 70. But the reality is that the line of least resistance in crude oil is on the downside. If we go to a weekly chart, you can see quite easily this is going to be a new low close for the week, and it's never really changed. And I think that's the important. You see it, you can say, oh, it's oversold, it's oversold, it's oversold. What I'm doing right now is looking at the Williams percent R, which you could say from this level here, let's say before late April to where we are right now, it's basically been oversold. But it doesn't matter because the market is still going down. A market can remain oversold or overbought for quite some time. And I think that's the important thing for you to remember. So let's just clear the screen, go to our next market. And the next market we're going to be looking at is going to be the euro. Okay, this is the, I don't know how many people picked this up yesterday, but it was rumored that Italy was ready to come in and ask for money and help for their banks. Now, Germany's going to be starting to hurt pretty soon as well because they can't just keep laying out this money and being the dominant force. But the action here is what we talked about before, and this is what I want to share with you. So let me put my illustrator on, and this will give you a kind of a, it's not a classic flag, but you've had the move down like this, okay? Then you have this type of formation. You broke out on the downside, okay, like right here. This is a negative, very negative month. If we close below 124 even, which is right here, you're going to see a lot more pressure coming into this market next week, and that would take it down to the 120, 117 level. So if we measure from the lows right here, let's just round that off to, this is 123, let's say. And we round it off from the highs, we'll call that 133. Well, that's nice, it's just 10 points. And we go from the I'm going to call this 126 just to be conservative. So we take 10 points away, you see that? So 123, 1.23 from 1.33 is basically 10. We take that away from, let's say, the 126 level, it takes you to the 116 level, which sort of puts us in that zone that we're looking for, and that's the 117 to 120. So I would say this is a decidedly negative week for the euro. I think the 14th or 15th summit they've had on this problem in Europe is not going to be resolved this weekend. I don't think anyone is going to make a decision. They are absolutely got, like ostriches, they've got their heads stuck in the sand, and it's not going to change. So it's going to continue to erode confidence and bank confidence in Europe. So let's clear the screen and go to our final market here. And that's going to be the CRB Reuters Jeffries Index. You can see this market is higher for the week. Like copper, that's the other market that's higher for the week. Commodity prices have actually gotten a little bit stabilized here and have been going up, especially grain prices. But you can see just based on this index alone, we've just sort of been moving sideways. Really nothing to speak of on the downside. So I think that's the important thing. You're just sort of trading back and forth here without any strong conviction. And I think we need to just see this market definitely break out below the lows. We still think it's going to go lower. We're looking for 250 on the downside. I think we're in a deflationary spiral, and I think this is just a pause before we see another leg down. So let's see how that plays out. But remember, tomorrow is Friday, end of the week, end of the month, end of Q2, and let's see what happens then. My guess is it's going to be negative, and we're going to see a lot of pressure on the market going into the weekend. I'm not sure anybody wants to go home this weekend long the equity markets or long anything else for that matter. So we'll see. Hey, this is Adam Hewison. Thanks for stopping by. Every success. Thanks for being a member of Market Club. We appreciate your business. And we'll be talking to you tomorrow, same time, same place. So have a great trading day.